How to combine indicators strategy. In this video, you will learn trend indicators, momentum indicators, pivot points, reversal candles, and how to combine these indicators to create strategies and generate signals. We will use a combination of technical indicators in order to analyze various aspects of any given security. Trend indicators will be used to analyze the main trend and decide whether it is bullish or bearish. The momentum oscillator's direction will be used to analyze the current move or latest price wave and conclude whether it is bullish or bearish. The momentum oscillator's area will be used to analyze price extremes and detect if prices are overbought or oversold. We will determine support and resistance levels using different calculation techniques of pivot points, and we will use reversal Japanese candlesticks to detect a shift in price direction near these support and resistance levels. Trend indicators are designed to show us the trend of a security. Among the many indicators available, we will use moving averages, moving average convergence divergence, MACD, Ichimoku Kinko Hyo cloud, and the average directional index, ADX. In order to analyze the main trend of a security, we will use the 100 periods simple moving average and compare it to the price, the 55 periods exponential moving average and also compare it to the price, the MACD line in relation to its equilibrium level at 0. We will also compare the Ichimoku cloud to the price and the 34 periods momentum indicator to its 100 level. We will get a bullish or upward signal if the price is above its 100 periods SMA, and a bearish or downward signal if the price is below its 100 periods SMA. The same goes for the 55 periods exponential moving average. We get a bullish signal if the price is above its EMA, and a bearish signal if the price is below its EMA. We get a bullish signal when the MACD value is positive above the 0 level, and a bearish signal if it has a negative value below the 0 level. If the price is above the Ichimoku cloud, we get a bullish signal, and if the price is below the cloud, we get a bearish signal pointing towards a downtrend. The momentum indicator will give a bullish signal when the momentum line is above the 100 level, and a bearish signal when the momentum line is below the 100 level. As a conclusion, if all the 5 indicators are giving bullish signals, we conclude that the main trend is a strong uptrend, and vice versa. If 4 indicators out of 5 are giving bullish signals, we conclude that the main trend is an uptrend, and vice versa. And if only 3 of the 5 indicators are giving bullish signals, we conclude that the main trend is a weak uptrend, and vice versa. In our example here, when analyzing the main trend of this security, we notice that price is above the 100 periods simple moving average and giving a bullish signal. Price is also above the 55 periods exponential moving average and giving a bullish signal. The MACD is in the positive territory above the 0 level and giving a bullish signal. Price is above the Ichimoku cloud, giving a bullish signal. Momentum is also above its equilibrium level of 100, giving a bullish signal. As a conclusion, since all 5 indicators are giving a bullish signal, we conclude that the main trend is a strong uptrend. Momentum refers to the velocity or the rate of change of a security's price. All momentum indicators compare price changes from a period to another. These indicators measure whether a rising trend is accelerating or decelerating, or whether prices are declining at a faster or slower pace. The direction of the momentum oscillators is used to analyze the direction of the current move or latest price wave and conclude whether it is bullish or bearish. Like prices, momentum moves in trends. That is why the same techniques that are used for analyzing price trends can be applied to momentum. When the oscillator goes below its uptrend line, we have a bearish signal, and when the oscillator goes above its downtrend line, we have a bullish signal. The same goes for moving averages. When the oscillator goes below its moving average, we have a bearish signal, and when the oscillator goes above its moving average, we have a bullish signal. Most of the time, the reversal in momentum reflects a similar reversal in the short-term price movement. When analyzing the direction of the current price move, or the recent price wave, we focus on the direction of momentum oscillators, and we will use the MACD line in relation to its signal line, which is the 9 periods exponential moving average of the MACD line itself. We will also compare the 14 periods relative strength index, RSI, to its 8 periods simple moving average, and the 14 periods rate of change indicator to its 8 periods simple moving average. We will also use the stochastic oscillator by comparing the stochastic line %D to its moving average %K, and the plus directional indicator in relation to the minus directional indicator of the average directional movement system. We will get a bullish or upward signal if the MACD line is above its 9 periods EMA, and a bearish or downward signal if the MACD line is below its EMA. When comparing the RSI to its signal line, we get a bullish signal if the RSI is above its MA, and a bearish signal if the RSI is below its MA. The same goes for the ROC. We get a bullish signal if the ROC is above its MA, and a bearish signal if the ROC is below its MA. The stochastic oscillator will give a bullish signal when the %D line is above the %K line, and a bearish signal when the %D line is below the %K line. When comparing the plus directional indicator to the minus directional indicator, we get a bullish signal if the positive DI is above the negative DI, and a bearish signal if the positive DI is below the negative DI. As a conclusion, if all the 5 indicators are giving bullish signals, we conclude that the current move is strong up, and vice versa. If 4 indicators out of the 5 are giving bullish signals, we conclude that the current move is up, and vice versa. And if only 3 indicators of the 5 are giving bullish signals, we conclude that the current move is a weak up, and vice versa. Moving to the current move analysis example, we notice that the MACD is below its signal line, the 9 periods exponential moving average, and giving a bearish signal. The RSI is above its 8 period simple moving average and giving a bullish signal. Price ROC is below its 8 periods simple moving average and giving a bearish signal. The stochastics line %K is above its signal line, the %D, giving a bullish signal. As the 5th current move indicator, the plus directional indicator is below the minus directional indicator, giving a bearish signal. As a conclusion, since 3 out of the 5 indicators are giving bearish signals, we conclude that the current move is weak down. The financial markets are essentially driven by psychological forces, and our emotions move from one extreme to another, from greed to fear, from hope to despair. This is what causes momentum indicators to fluctuate from oversold to overbought levels. The oscillators area reflects the crowd psychology and measures the intensity of the emotions of market participants. The momentum oscillators area is used to analyze price extremes and detect if prices are overbought or oversold. Extreme momentum readings indicate a possible correction in price. These signals are used by some traders to exit or enter new positions against the previous price direction. An oversold condition is reached when the oscillator dips below a certain threshold, for example, 30 for RSI and IMI. And an overbought condition is reached when the oscillator goes above a certain threshold, for example, 70 for RSI and IMI. Now, if more than one oscillator gives the same signal, the stronger this signal becomes. For price extremes, the intraday momentum index, IMI, will be used in relation to its 30% and 70% levels. The relative strength index, RSI, is also compared to its 30% and 70% levels, and the commodity channel index in relation to plus 100 and minus 100 levels. IMI will reflect an oversold condition if it is below 30% and an overbought condition if it is above 70%. Similarly, the RSI will reflect an oversold condition if it is below 30% and an overbought condition if it is above 70%. The CCI is an unbanded oscillator, and therefore it will reflect an oversold condition if it is below -100 and an overbought condition if it is above +100. As a conclusion, 2 of the 3 indicators should reflect overbought readings in order to conclude an overbought price state. And if all 3 indicators are the overbought price, it is considered to be extremely overbought, or in other words, overbought level 2. Similarly, 2 of the 3 indicators should reflect oversold readings in order to conclude an oversold price state. And if all 3 indicators are oversold, price is considered to be extremely oversold, or in other words, oversold level 2. Else, price is considered in a neutral state and can move smoothly in any direction. Moving to the third aspect in our analysis, price extremes. We notice that IMI is higher than 30 and lower than 70, and therefore giving a neutral signal. The RSI is also floating in the neutral zone between the levels of 30 and 70. Similarly, the CCI indicator is above -100 but below +100 and also giving a neutral signal. As a conclusion, since all 3 extreme indicators are giving neutral signals, we conclude that the price is in a neutral state and can move smoothly in any direction. For our fourth aspect, we will discuss pivot points as a widely used technique for finding possible support and resistance levels. Pivot points use the prior high, low, and close price of a higher time frame to determine future support and resistance levels. As pivot points are estimated using previous prices, for intraday charts, we use prior day, high, low, close. For medium-term charts, we use prior week, high, low, close. And for long-term charts, we use the previous month's data. The standard pivot point is calculated by averaging the prior high, low, and close price of a higher time frame, which then acts as the main support or resistance level. Based on this point, we can then calculate the first support level by multiplying our pivot by 2 and then subtracting it from the previous high. The first resistance can be found by multiplying the pivot by 2 and subtracting the previous low. An additional support level can be found by subtracting the range of the previous period from the main pivot point. Additional resistance can be found by adding the range of the previous period to the main pivot point. Now that we have calculated the pivot points using the higher time frame, we can use them to trade. If the prices find support on the pivot, it implies further strength towards the first resistance level. If the resistance level is broken, this implies strength towards the next resistance. Similarly, trading below the pivot point suggests weakness towards the first support. If the support is broken, this implies further weakness towards the next support level. Supports and resistances are widely used by traders as levels around which they place their stop losses and targets. Now we will talk about Japanese candlesticks as the fifth and last aspect of the analysis. When analyzing a candlestick, the most important element is the size of the body. A large body indicates that either buyers or sellers are clearly in control. For example, a large green candle shows that the buyers are winning and controlling the market, while a small candlestick represents a consolidation of price, where there was no clear winner between buyers and sellers. Reversal candles can be useful triggers when searching for an entry signal since they indicate a shift in momentum. For example, if the price was dropping and we have the right setup for a long trade, the last trigger could be the formation of a bullish reversal candle. A bullish reversal candle is simply a bullish candle with a big body, reversing the price action of the last red candle. In pattern number 1, notice how the green candle is closing with a big bullish body, and this is why it is considered a bullish reversal candle. In pattern number 2, the first green candle also possesses a big body and is considered a bullish reversal candle. In pattern number 3, however, the green candle does not possess a relatively big body, and therefore it cannot be considered a reversal candle. In pattern number 4, notice that the second bullish candle is acting as the reversal candle because it managed to close with a big bullish body relative to the other candle's body. A bearish reversal candle is simply a bearish candle with a big body, reversing the price action of the last green candle. In pattern number 1, notice how the red candle is closing with a big bearish body, and this is why it is considered a bearish reversal candle. In pattern number 2, the first red candle also possesses a big body and is considered a bearish reversal candle. In pattern number 3, however, the red candle does not possess a relatively big body, and therefore it cannot be considered a reversal candle. In pattern number 4, notice that the second bearish candle is acting as a reversal candle because it managed to close with a big bearish body relative to the other candle's body. Reversal big body candles are also used as an extra filter for further confirmation before entering a new trade or closing an existing one. When we have an entry signal and want to enter a long position, a buy can be executed above the high of the candle that generated the signal or confirmed the setup. When we have an entry signal for a short position, a sell can be executed below the low of the candle that generated the signal or confirmed the setup. The same filtering technique applies for stop losses and when exiting an existing position. Putting together the various aspects of our analysis for the given security, we conclude that the main trend direction is strong up, since all indicators out of the 5 main trend indicators are reflecting bullish signals. With regards to the current move, we conclude that the current move, or the direction of the last price wave, is weak down, since only 3 out of the 5 indicators are reflecting bearish signals. And for market extremes, we conclude that the price is in a neutral state, not oversold nor overbought, and can, therefore, move smoothly in any direction. By combining these 3 price action aspects of a security, traders can develop various trend-following and contrarian trading strategies. This combination of indicators can also be used by traders to complement their existing trading strategies. In other words, it can be used to validate or further confirm other trading systems. A suggested trend following trading strategies could be the bullish correction strategy, as we like to call it. A bullish correction signal is given when the following conditions are met. Condition 1. The main trend should be strong up or up. Condition 2. The current move should be strong down or down. Condition 3. The market extreme should be oversold level 2, oversold level 1, or neutral. Condition 4. We must have a big bullish candle with entry level above this big bullish reversal candle. The stop loss should be placed below the pivot support level or the lowest level reached, and the target should be set around the pivot resistance area. This trend-following strategy aims to capture bullish trades in the same direction as the main trend. The aim is to wait for a bearish counter-trend correction towards a support zone, then identify the end of the correction, which will be highlighted by a big bullish reversal candle and an open long position towards the resistance area. The opposite would be the bearish correction strategy. A bearish correction signal is given when the following conditions are met. Condition 1. The main trend should be strong down or down. Condition 2. The current move should be strong up or up. Condition 3. The market extreme should be overbought level 2, overbought level 1, or neutral. Condition 4. We must have a big bearish candle with entry level below this big bearish reversal candle. The stop loss should be placed above the pivot resistance level or the highest level reached, and the target should be set around the pivot support area. This trend-following strategy aims to capture bearish trades in the same direction as the main trend. The aim is to wait for a bullish counter-trend correction towards a resistance zone. Then identify the end of the correction, which will be highlighted by a big bearish reversal candle and an open long position towards the resistance area. Now that you know how to combine the above indicators and create your own trading strategies, you don't need to do this task manually anymore. You can simply attach the Overbought Analyzer indicator on any chart, and it will do the hard work for you. To do so, click View in the top left corner and enable the Navigator window. Under the folder of indicators, Overbought Despotis, you will find the Overbought Analyzer indicator. Drag and drop it into the chart, and remember to enable Allow DLL imports. After attaching the Avramis analyzer, you can clearly see how the indicator is analyzing all the different trend and momentum indicators and automatically identifying the main trend direction, the current move, price extremes, big reversal candles, and pivot and support resistance levels on multiple time frames. The indicator is also highlighting various trading strategies whenever a strategy is available. On the left side of the chart, you can also notice the pivot level, support levels, and resistance levels clearly outlined together with 3 clocks. The first clock is designed to show the main trend direction, whether it is strong up, up, weak up, neutral, weak down, down, or strong down. The second clock is designed to show the current move direction and whether it is strong up, up, weak up, neutral, weak down, down, or strong down. And the third clock to show the price extremes and whether the market is overbought level 2, overbought level 1, neutral, oversold level 1, or oversold level 2. If you click on the Parameters button, which is located here, a new panel will open listing the various trading strategies. In the list of strategies, you will find our suggested bullish correction and bearish correction strategies, but you can design and add as many strategies as you like to this list. To add a new strategy, simply click on the plus button, name your strategy, and then choose the conditions you like for the various sections of your strategy: the main trend, current move, extremes, and big candle. One or more options can be chosen simply by clicking on the box next to each option. When you finish designing your strategy, save it by clicking on the check button, and the strategy will be added to the list. Simple. Once created, you can amend any strategy. To do so, click on the Envelope button next to the strategy name, complete the changes, and save it again by clicking on the check button. You can also delete any strategy. To do so, click on the Envelope button next to the strategy name, and then click on the X button. Select Confirm Deletion, and the strategy will be deleted. To close the panel, just click on the minus or minimize button. The newly added strategies will appear under the Strategy section of the indicator whenever the strategy conditions are met. The indicator main panel will outline all the strategies on the enabled timeframes. Timeframes can be activated or deactivated from the top of the monitor panel. More options can be found in the indicator settings. To access the indicator settings, right-click on the chart and select the indicator list. Select the Avramis Analyzer indicator and click on Properties. From the Inputs tab, you can adjust the parameters of the indicator. At the top of the list, the language of the indicator can be changed from the drop-down menu. The next option is to activate the scanner mode, which is available in the advanced version of the tool. Next, the time frames selected in the monitor panel can be adjusted. All 8 time frames that appear on the monitor panel can be adjusted to show the chosen time frame. Through the drop-down menu, you can select any time frame to show in the monitor panel. Scrolling further down, you can choose what to show and what to hide from the different sections of the indicator. For example, you can choose to show the main trend indicators or not. Using the clock setting, different color clocks can be selected according to the background color being used. Furthermore, the dimensions of the rows and columns of the monitor panel can be adjusted. Also, the height and width of the panel itself can be changed. From this section, the color of the pivot levels can be changed from the drop-down menu. Further down, the parameters for the various trend and momentum indicators can be adjusted, such as the periods and levels for each plot. And from this last section, the time frame used for the pivot calculations can be changed from the drop-down menu. The most interesting thing, however, that you can do in the indicator settings is to enable the scanner mode at the top of the list. Closing the settings window will reload the monitor panel with the enabled scanner. When using the scanner mode, the indicator will scan through all securities that are visible in the Market Watch window on the left side and identify all possible strategies across the enabled timeframes. Note that you might have more than one page of possible strategies, and you can access these pages by clicking on the Page Plus and Page Minus buttons. And you can access these pages by clicking on the Page Maximize and Page Minimize buttons. Clicking on the envelope icon of the strategy you want to check, next to the instrument symbol, will automatically switch the chart to the desired instrument. Thank you for watching.